It's time for the Gold Show. Jonathan Rose, CEO, President of the Capital Gold Group, and Precious Metals Investment Strategist is with us today. Jonathan, good to talk with you.
It's a pleasure to be here. Gold continues to skyrocket. Gold's over $1,143 an ounce today. We're going to show you why you don't wait to buy gold, but you buy gold and wait. And in fact, as the dollar continues to slip, countries worldwide are increasing gold as a part of a central bank strategy to increase gold holdings, to diversify away from the dollar. And we're going to be showing you on today's Gold Show why you should be doing exactly the same.
And before we get started, is it possible for our listeners to get the freshly updated gold guide in their hands so they can get a history on gold and know why gold is so precious to have right now?
Absolutely. People can just pick up the phone, call us toll-free at 800-510-9594. That's 800-510-9594. You'll be greeted by our friendly gold specialist, and you can request the gold guide. It will show you how to purchase gold at the lowest possible prices, which gold coins and bars will give you a better return in the future. And if you have an IRA or a 401k, just like it was featured in the Wall Street Journal, we will show you how to roll that over into an IRA backed by solid gold. It's still an IRA. You still get your statements. The only difference is you have physical gold in your own segregated safety deposit box that's gaining in value, unlike the dollar investments out there that's losing. Also, if you'd like to subscribe to our podcast, please do so at safeasgold.com. And if you're interested in knowing worldwide gold prices, just log on to safeasgold.us.
Well, as we begin, a major article in the LA Times referred to gold as being the great if-only investment, suggesting that if I'd only bought it about 9 years ago or 4 years ago or 6 months ago. Do you agree with that, or is there still upside potential for gold?
Well, you know, when I always say you don't wait to buy gold, you buy gold and wait, that's always been drummed into me because there's never a better time to purchase gold than right now. Gold has not even reached its upside potential. In fact, there's other articles, strong articles to support the fact that if we were to adjust for inflation today, gold should already be trading over $2,200 an ounce. So we're not even 50% where really gold should be if we were to adjust for inflation. So whether you purchase gold 9 years ago, 4 months ago, or even last week, or even today, you know, there's huge upside potential for gold, and it really makes sense to balance a part of your portfolio, and that's why I always refer to gold as portfolio insurance, just like you have insurance for your car, insurance for your health, as the dollar continues to slide. And here's an interesting fact. According to Bloomberg, the US dollar index has actually fallen, extended this year's losses to 8.1%, but gold has jumped 29% in 2009. So as the dollar continues to tank, and it's not just Bloomberg saying this, in fact, PIMCO, they're the world's largest bond fund manager, said that the dollar will weaken as the US pumps massive amounts of money into the economy. And what people have to understand, with all this money that's being printed, with our trade deficit that's an all-time high, with bank failures that have been happening this year, there's a reason why people are shifting towards precious metals, particularly gold, that you get to hold on to, because gold is seen as a safe haven. It hedges you against inflation. I also expect gold to, continue to skyrocket to $3,000 to $4,000 an ounce over the next 3 to 4 years.
Jonathan, it's been described as gold as being real wealth. What does that mean? It's real wealth compared to what, paper?
Absolutely. Metals are very desirable right now. And let's face it, it's not like paper that can just be mass printed and put some ink on it and then just hand it out. That's why we're in this problem right now, because there's so much money floating around out there. It's devaluing our currencies. And in fact, countries worldwide are really screaming to the fact right now that they don't want to be holding on to dollars. They want to move away from dollar-based currency and move into maybe a currency of their own, or even a new super currency. In fact, a lot of these Saudi Arabian sheiks that have made their money in oil, they're not purchasing ETF, which are electronically traded funds invested in gold. They're buying the actual physical gold you can hold on to. And if you look at gold, not only does it have, over a 2,000-year track record, but there's reasons why members of the royal family, heads of states, have been using gold to preserve their wealth and income for centuries. It's no secret. And in fact, a lot of Wall Street traders are actually, running around screaming, cash is trash, cash is trash. Obviously, there's a slight joke to that, but the message that they're trying to convey to people is, this is the year you want to be holding onto gold. The yellow metal, if you dropped it on your foot, you went, ow. You want to have something tangible in your hand you can actually feel. And the biggest mistake people can make in 2009, 2010 forward moving is simply not diversifying. And that's why you have countries such as India who recently purchased over 200 metric tons of gold to increase their gold holdings. And in doing so, they've done this because they believe that the declining dollar worries them so much that they want to have a safety net, that insurance, that portfolio insurance that I continue to talk about. South Africa, China, India, they are three of the largest countries in terms of mining the gold out of the ground. And remember, there's only so much gold out there. It's not like paper that we just talked about that you can put in a printing press and stamp some ink on it. Once the gold is gone, it's gone. And in fact, couple that with a dwindling gold supply and upsurging prices to produce the gold out the ground. The cost of it is expensive to get it out. These are other factors why the price of gold continues to soar. And my predictions, as I've mentioned all year long, $1,200 an ounce for gold bullion by the end of this year, and then in the next 4 to 5 years, expect to see $3,000 to $5,000 an ounce for the price of gold. Very realistic, and it could happen before you know it.
We're talking with Jonathan Rose from the Capital Gold Group, and why precious metals, why gold right now. And you speak with a sense of urgency. You feel like there is an upside potential. Of course, no one can have a crystal ball, but we do know that inflation has always been there, that the dollar has pretty much always lost value over time. Just ask your parents or grandparents what a dollar used to buy. That's the real danger here if we don't go to protect our assets, right?
Absolutely, and it's not just an upside potential, it's a tremendous upside potential. With gold bullion hovering over $1,100 an ounce, if you purchase gold bullion, let's say for, $1,200 an ounce right now, and in 3 years, it was trading over $2,000, $3,000 an ounce, people would be happy with those type of returns. And as Warren Buffett clearly stated, the days of double-digit returns in the stock market, they're over. And again, that's why he recently purchased two of the largest gold manufacturing companies, because he believes that the gold will continue to soar. Companies like Bloomberg, Merrill Lynch, Bank of America have very high expectations for gold, and you should have high expectations for gold as well.
All right, you've convinced us. We want gold. Now, how do we choose the reputable firm to purchase gold from? Explain what factors are in play.
Well, first of all, you want to make sure that there's been a longevity in terms of a company that's been in business, such as Capital Gold Group. We're also accredited and have a glowing record with the Better Business Bureau, and more importantly, we're actually bonded and registered with the State Attorney of California. And these are some of the factors people should look at. And why this is important is this: when you're purchasing gold, sometimes people are purchasing hundreds of thousands of dollars or millions of dollars worth of gold. Well, when it comes time to sell that gold, guess what? We want to buy that gold back because it's our gold. We know the authenticity, we know the purity of the gold. And if you go to a local coin store, for instance, and you purchase $50,000 worth of gold, and all of a sudden it's now $300,000 worth of gold, and you walk in there and you want to liquidate, are they going to be cash liquid to purchase your gold portfolio back? Probably not. So people come to companies like Capital Gold Group where they get assigned their own gold specialist who will only also track your gold portfolio with you. And when it comes time to sell, we guarantee to buy your gold back at full market value with no commissions or fees, and we're with you from the start and the finish.
To hear more, visit safeasgold.com and subscribe to the podcast or listen on iTunes by searching The Gold Show with Jonathan Rose.